Good morning, SMF. Market makers, traders around the world, everyone involved with the SMF network. It's important that it's 5:17 a.m. Pacific Standard Time, 17 minutes after the 8 o'clock hour in the New York time, 8:17. The thing that we're looking at is we got some different type of gaps here on the Nasdaq. And the Nasdaq futures today are down. They were down as much as 22 handles early on in the morning. A couple hours ago, Nasdaq futures are pairing off some of the losses at 23.26, down 14.5. Nasdaq fair value is minus 0.8.31 ratio as far as negative fair value on those futures. The FTSE, the CAC, and the DAC are all down naturally. And we are going to take a look that we are in the earnings season right now. And one of the things we're looking at is CBST 3.7, 5.28 here. Expedia finally making some of the way. Schnitzer Steel reported earnings the other last night. I didn't think it was all that good. A lot of things happening in semiconductor. National Semiconductor has been bought by Texas Instruments, and you can see the SOX, the SOXSX, got a 60-cent gap with that news coming out of that sector. The type of gap uplift that we have, it's not long, and starting at 1.0 ratio, it's only 1, 2, 3, 4, 5, 6, 7 names. Okay, now on the gap open down list, okay, Apple leading the way, Google leading the way. There is Cree, there is LEDS down $3.07. So we got 4 and 2 of the bellwethers. There's a lot of news on Apple this morning because Apple, they weighted up the Nasdaq 100 index to run it to all-time highs when Apple was in a great ripping uptrend. That's what took that index, and that's what led that TQQ bull. But now we will be doing a special later. They're going to reduce the weighting as we have been short this name and continue to hold short this name. But don't forget that our shorts started up around the 52-week highs. And this piece of crap right here will be taken out of the weighting, and we will do a video special on that. But once again, they use good names at good times to manipulate these indexes, get them up to the highs, suck in all of the bulls, and then you have a correction like we just came off of. And we're going to talk about when this next correction comes, which it is, it's going to be a lot more higher price action volatility to the downside in 2011 as we move forward toward that July, right about in the middle of the year. And we are right now going to classify another, we had reversal 1 in February. It's on our homepage there, 16th, 17th, 18th, 19th, whatever it is. And we come up in a bull trend back up to those necklines, and some have even made higher highs. That whole process of the bear short and the bull run have taken their place. And as I said over the weekend, and as I said last Friday, looking at those daily and weekly charts, is that something's going to happen in here. And it's very important that you don't get complacent, but trade negative ratios. If negative ratios are coming back, that's the short side of the market, so be it. Who cares? We don't care. But look at the big gap open down. A big story we'll be doing on Apple and weighting indexes and manipulation. May even turn this into a special documentary as manipulation, corruption, thievery, and everything else, and every little gimmick and every little crap trick that these people will do on Wall Street is way beyond the comprehensive levels of a regular Joe Blow retail buy, hold, or seller in the stock market. They don't even have a clue. Well, one of them is right here. And it's been a common practice that these thieves, which get these indexes long and short, they get their weighted balances way out of control. This TQQ, was weighted to this Apple trade. And now that that will reduce that, then this won't be so tied to that. And the Apple is tied to the Nasdaq 100 and the Nasdaq comp. And the weighting of it and what they did is a big gimmick and a big sham that they started a long time ago. Now that they're going to reduce that weighting, they don't reduce the weighting unless there's some fear. And they're taking the weighting down on Apple because Apple's going to have a lot of problems. That's why we're short up there at them 52-week highs. And we have all the live videos to prove it. And it was a short to hold. You can notify me when the stock gets down around $280, $285 over the next few months. I don't care how long it takes. That's where we'll look at covering our shorts on this piece of crap. Okay? And investors that have been holding it all the way down off of those highs, you're going to get burned. And I said burned. Now, on the other hand, Google's a different story. It's got antitrust concerns all of a sudden overnight. And we have a gap down. One of the things that we take a look between the Apple and the Google is where the current Apple price was a short at 52-week highs and Google's at 52-week lows that, and I mean 52-week 2011 lows, was where all of this shenanigan and all of this speculation about there's a difference. We'll be doing a special on Google again today based on antitrust issues. And the same people that approved all of their other purchases, once again, Microsoft is a player in here going after them. We'll talk more about the whole Nasdaq 100, the weighting, the Google trade. We'll do a different video. Right now, the trading day is that we have a diminishing gap up list. There is some positive news out here. And once again, we will just trade the tape between the public as a market maker. If it's negative ratio, roll up Beethoven like it was in a lot of stocks yesterday, so be it. If we're going to get another bear reversal now that we've had the bull run, so it would be a so if we do get a bear reversal, we'll know. If we can't break higher in the yearly formulas and we start to tick down in those deltas, well, then that means that it would be a double bear reversal to the last bull reversal. So right now, either it's going to be a continued bull reversal from the bear reversal or a double bear to the bull. So once again, stay tuned.